Good day, I'm Chartered, your accounting tutor. In today's class and video, it is a perfect continuation from end of accounting period adjustment. And mind you, I promise to give you the latest foundation in accounting that carries all what you need in accounting, not leaving anything behind. And that is why I want to give all the proof on adjustment. Most learners don't know, or if most tutors don't include this in their teaching. Why? Because it's so hidden. And I want to clarify everybody's doubt that this must be understood as accounting process is concerned. What am I talking about? I'm saying that in accounting, if adjustment arises at the end of the year, you have to incorporate this adjustment back into the ledger account via the journal and the ledger account. After getting it right, you have to adjust the ledger account, get new balances, and prepare what is called the adjusted trial balance. That is the ledger and the journal will incorporate all the adjustments that were not included in the ledger accounts. So getting the adjustment right, you now prepare what is called the adjusted trial balance, which will not have any adjustment again because all the adjustments have been captured. Then after then, you now use the adjusted trial balance to prepare what is called the financial statement without adjustment. Go and study your accounting process. That is how it's supposed to be. But most learners doesn't even know. Even most tutors normally exclude this after the process of accounting. And most students graduate without knowing this. And it's a top secret. And I want everybody to follow and see how the whole real process of accounting is continued. And that is why I promise you to give you the sound foundation in accounting that can take you anywhere. Let's continue. If you look at the previous class or even the continuation of this, we are talking about accrued expenses. Accrued expenses is an adjustment. It's an adjustment. How can you solve it and how can you take it to profit or loss and financial position? That was done in the previous class. I did justice to show how accrued rent and the other one appeared in the profit and loss account and statement of financial position. But let's come back to prove how these are being adjusted in the journal and ledger accounts, and then you take it to adjusted trial balance before preparing the financial statement. Let's look at how it appeared in the ledger because the journal was handled in the previous video. If you miss it, I beg you go and watch, otherwise not follow me the way you're supposed to follow. Don't miss any of my video because it's a sequential movement that will take you to the journal of accounting to have a sound foundation. Let's look at what is happening in the previous class. We now say that if you're given a question or you are given a question and you have insurance in the trial balance and you have rent in the trial balance, as you can see, this was the actual amount of insurance and rent that was paid by the business, either by cash or bank, which you see them in the trial balance, which was balanced in the ledger account, and the balance brought forward was transferred to the trial balance. So this is the balance brought forward in the insurance account, and this is the balance brought forward in the rent account. Then this is what is called trial balance extract. Extract means this is a full trial balance, but we only extract those elements or those things that we are interested to handle so that you understand. So if it's a full question, this will be part of the other items in the trial balance, and that's why it's called trial balance extract. So let's look at it now. If insurance is paid in the trial balance 100,000, and coming down that information one, we say insurance owing as at 31st 12/2025. Mind you, we are tagging these trial balance to be 2025, which is the current year 2025. So now, if the current year is 2025 and insurance owing as at the current year 20,000, how can you incorporate this into ledger account so that it can prove and give you the go ahead to prepare what is called adjusted trial balance? Let's quickly go to the proof of it. This is at the end of the year now. The year have ended and insurance have been transferred to the trial balance, and then there is an accrual. How can you handle it? Bringing it back to ledger account to have the proof to prepare the adjusted trial balance. First, you come and open a new insurance account. Inside the new insurance account, the first thing you take is the balance that was found in the trial balance. We now say at the 31st of 2025, the trial balance report 100,000 that was paid for insurance. Why is it debited? Debited because insurance, the trial balance is debited, and that is why here you debit it. Then coming to the accrual. Accrual here, I told you that accruals of the current year are always added. Accruals of current year are always what? Added. So if there's an accrual, it means you are going to add the accrual to the previous amount that was owed to be able to get the actual amount that was supposed to be paid. What is called a matching concept. So here, that is why at the end of the year, which is 31st to 2025, we are adding the accrued insurance amount of 20,000 to the amount that was paid to get the actual amount that was supposed to be charged in the profit or loss account. So if you add 100,000 to 20,000, you will get 120,000. Then it means 120,000 become the amount that we charge in profit or loss account. This is what we bond in profit and loss account as an operating expenses. So as you can see, the account is balanced. That is the amount the trial balance add with the accrued insurance. So if any expense accrued, this is how you handle it. You bring the amount the trial balance. If the accrual is that of the current year ending, add the figure to the initial one the trial balance, then the total amount is what we bond or use under operating expenses as an expenses. Then, but this not end the story, because if insurance is accrued at the end of the year, it means it become a liability. Then you need to open an account called insurance accrued account. So now you come and say accrued insurance account. Accrued insurance account. Mind you, if you come to ledger, we know that any debit entry must have a corresponding credit entry. Any debit entry must have a corresponding credit entry. This is a debit entry, insurance accrued, which was introduced to add to the previous one. For the fact that it was debited, now they come and open accrued insurance account. The transaction that was debited will be transferred to the credit side. To the credit side of insurance accrued account, and the particular insurance, where we are picking this entry from insurance account, and that is why it is credited 20,000. Now, if you discover that this is the only amount found in insurance accrued account, for the fact that it's a liability, and liability is not paid at the end of the year, will be carried forward to the next year. So because of that, we have to balance this account. As we balance what is called balance carried down, which is 20,000. Then this account is now balanced. But I told you in ledger that any account that is balanced will carry down must have a balance brought down. And that is why the balance carried down of accrued insurance of 20,000, then we now have a balance brought down of 20,000, which will be taken to another year, which is 2026, which become a liability that the business have to address as they come to 20%, because insurance was not paid or 20,000 was standing as a liability, which will be taken forward to 2026, and that is just it. Then, if you do this, it means this balance brought down will be the amount that will be taken to what is called the adjusted trial balance. As you prepare the adjusted trial balance, the rent figure that was paid will be there, and the accrued, the insurance amount that was paid will be there, and the accrued insurance also will appear in adjusted trial. Don't worry, I'm going to teach you adjusted trial balance. You see how these items will be corrected via the ledger, the journal, and they will also appear in the adjusted trial balance, giving you a trial balance that will be with an adjustment that you use in preparing your financial statement. Let's quickly address the next one. In the previous class too, I told you that we have two forms of accruals. That is accrual of the current year, which is 2025. Haven't finished that one. Then we are looking at accrual of the previous year, whereby the business did not pay an item from the previous year, which was brought forward in the current year. So now, rent in arrears as at 31st to 2024, it means at the end of 2024, rent was still not paid, which will be taken forward in the current year, which is 2025. This is an adjustment. Mind you, I told you that you add this while you deduct this. I explained all that in my previous class. Let's quickly look at how you justify or prove this via the ledger account. Here you come and open rent account. Opening rent account, mind you, I told you that in the debit side, you must first bring what is called the balance, what you have in the trial balance. So mind you, the trial balance at the end of 31st to 2025, the trial balance report the rent figure of 150,000 naira. 150, which will be debited because it is a debit item, the trial balance. By the way, all expenses are debited. It's another proof of that posting why it is the debit side. The next thing is you have to take this forward. In short, this is supposed to be the first, because first in the rent account you have to first take the balance brought forward in the previous year. Not even treating that one first. Treat this one first. This was rent owing in the previous year. So if you come to rent account, it's a new rent account, in trying to do your adjustment, the first item you take is the rent that was in the previous year brought forward, and you take it in the credit side. Why are you taking the credit side? You are taking the credit side because in accounting we say that all liabilities brought forward are credited. Take it as a standard principle in accounting. All liabilities brought forward are credited. Rent owing on the rent was a liability, and which it was not paid the previous year. If you want to take in the current year, which is 2025, it become a brought forward, and because the liability, all brought forward of liabilities are credited, and that is the proof of it. While all assets are debited, and that is why the brought forward of rent in arrears was taken in the credit side. Look at the amount here, 10,000, and that is why you now come and then pick that of the traveler and debit it. Then in this way, mind you, I told you that in this area, the amount, any rent owing the previous year should be deducted. And looking at the amount of balance account, the 10,000 the credit side, the amount paid to the debit side, then you balance it. By balancing, you are deducting, where you now say 10,000 minus 150,000 minus 10,000 give you 140,000, meaning this is what you are going to charge in the profit or loss account. Then in your profit and loss account, what will be found under operating expenses as far as rent is concerned will be 140,000. Another simple proof is that taking that you are owing an amount of rent in the previous year, which is 10,000, and coming to the current year, you paid 150,000. It is a simple arithmetic. The owner of the house will first remove the amount that you are owing the previous year, and then what will remain the current year, 140,000, and that's another simple proof. But in accounting way, this is how you present it. The brought forward is 10,000. The amount paid for the trial balance will be 150,000 debit side. When you minus it, you get what we charge in the profit and loss account as rent, which is 140,000. Mind you, this ends the story. We are not going to have an extra account here because there was nothing that was owing again. Because the owing of previous year is already settled, and in the current year, rent is no more paid. Rent is no more owing. It was even paid more, and by the time you deduct it, you discover that this is the end of the story. There's no extended value, and the amount of 10,000 will not appear in the new adjusted trial balance because the rate has been settled already. But in the case of insurance, it will appear because we are going to still take it forward, and that is why it will appear in the adjusted trial balance. Don't forget to like my video, follow or comment, because I promise that I'm going to give you the sound foundation, all the grounding that most learners don't know or most tutors don't include in their teaching. I'll make sure I'll bring it out so that if you follow my class, you have all the sound foundation needed in accounting for you to excel. I remain Chartered, your accounting tutor. Don't forget to like my video, follow, share, so that knowledge will flow, so that the sound foundation we have in accounting will continue to flow. Thank you.